Owning a home is one of the most significant financial milestones a person can achieve. But many homeowners don't realize that their property holds more than just sentimental value. Hidden within the walls of your home is a powerful financial resource called home equity. And understanding how to access it can completely transform the way you approach major financial decisions. Whether you're dreaming of a kitchen renovation, looking to consolidate high-interest debt, or planning to cover a major life expense, your home equity could be the key that unlocks the funding you need. The concept is straightforward. As you pay down your mortgage and as your property value increases over time, the difference between what your home is worth and what you still owe becomes your equity. That equity is real money, and under the right circumstances, lenders will allow you to borrow against it. But before you walk into a bank or apply online, you need to understand exactly how much you can borrow, what your monthly payments will look like, and how much interest you'll pay over the life of the loan. That's precisely where a home equity loan calculator becomes an indispensable tool in your financial planning process. A home equity loan calculator is a digital tool designed to give homeowners a clear and immediate picture of their borrowing potential based on a few key pieces of financial information. Rather than waiting for a bank appointment or going through a lengthy pre-qualification process just to get a rough estimate, this calculator puts the power directly in your hands within seconds. The tool works by taking your home's current market value, subtracting your remaining mortgage balance, and then applying the lender's loan-to-value ratio to determine the maximum amount you may be eligible to borrow. Loan-to-value, often referred to as the ratio that compares your loan amount to your property's appraised value, is one of the most critical factors lenders use when evaluating home equity loan applications. Most lenders allow borrowers to access equity up to a combined loan-to-value ratio of around 80 to 85%, though this can vary depending on the lender and your creditworthiness. By entering your numbers into the calculator, you get an instant estimate of your available borrowing power, your projected monthly payment, and the total interest you would pay over the loan term. This kind of transparency is invaluable when you're trying to make informed financial decisions without the pressure of a sales environment. Using a home equity loan calculator is remarkably simple, and you don't need any financial background to get meaningful results. The first input you'll need is your home's current estimated market value. This doesn't have to be an official appraisal number, though that would be the most accurate. You can use a recent property tax assessment, an online home valuation estimate, or a comparable sales figure from your neighborhood to get a reasonable starting point. The second input is your current mortgage balance, which is the amount you still owe on your primary home loan. You can find this number on your most recent mortgage statement or through your lender's online portal. Once you've entered these two figures, the calculator determines your raw equity by subtracting the mortgage balance from the home's value. The third variable is the loan-to-value limit, which you can typically set between 75 and 85%, depending on what lenders in your area commonly offer. After that, you'll enter the loan term, which is the number of years over which you plan to repay the borrowed amount, and the interest rate you expect to receive. With all these inputs in place, the calculator instantly generates your estimated maximum loan amount, your monthly payment, and your total interest cost over the life of the loan. Tools like the one available at legitcalc.com/home equity loan calculator make this entire process seamless and user-friendly, allowing you to adjust variables and see real-time changes to your estimates. Once the calculator delivers your results, it's important to understand what each figure actually means for your financial situation. The available borrowing power figure tells you the maximum amount a lender might be willing to extend to you based on your equity and the loan-to-value limit you entered. This is your ceiling, not necessarily the amount you should borrow. Just because you qualify for a certain amount doesn't mean taking the full sum is the wisest financial move. The monthly payment figure is arguably the most practical number in the results because it tells you exactly how this new loan will affect your budget every single month. A home equity loan is a fixed-rate, fixed-term product in most cases, which means your payment stays the same from the first month to the last. This predictability is one of the biggest advantages over other borrowing options like credit cards or variable rate lines of credit. The total interest cost figure gives you the full picture of what borrowing will actually cost you over time. For example, borrowing $50,000 at a 6% interest rate over 10 years might result in a total interest payment of nearly $16,000. Seeing that number up front helps you weigh whether the purpose of the loan justifies the long-term cost, which is exactly the kind of clarity that leads to smarter financial decisions. Home equity loans are among the most versatile financial products available to homeowners, and the calculator helps you explore that versatility with confidence. For home improvements, knowing your borrowing power in advance allows you to set a realistic renovation budget and approach contractors with a clear spending limit in mind. For debt consolidation, you can compare the interest rate on a home equity loan against the rates you're currently paying on credit cards or personal loans. In many cases, the home equity loan rate is significantly lower, which means you could save thousands of dollars in interest while simplifying your monthly payments into a single, manageable obligation. For major life expenses such as college tuition, medical bills, or even starting a small business, a home equity loan can provide a lump sum at a competitive rate that would be difficult to match with unsecured borrowing options. The key to using this tool effectively is to run multiple scenarios. Try different loan amounts, adjust the term from 5 years to 15 years, and experiment with slightly different interest rates to understand how each variable shifts your monthly payment and total cost. This kind of scenario planning transforms the calculator from a simple estimation tool into a genuine financial planning resource. Before making any final decisions, it's always wise to consult with a qualified financial advisor or mortgage professional who can account for your full financial picture, including your credit score, income, and existing debt obligations. But starting with a solid estimate from a reliable calculator like the one at legitcalc.com/home equity loan calculator gives you the foundation you need to enter those conversations fully informed and ready to make the best possible choice for your future.